Hello everyone and welcome to this weekly technical outlook here at xm.com. This week the main focuses are the central bank meetings that are coming up, and let's start from the main focus, which is the Federal Reserve on Wednesday. The expectation of a more accommodating monetary policy in the largest global economy has been causing a significant increase in the stock market, but let's also have a look at the euro and dollar. So as the euro and dollar is seizing, it's finding strong support at the 200-day SMA of 1.0840 ahead of the 1.0795 level, ahead of this medium-term ascending trend line. A break beneath this line, then it may drive the market even lower towards the 1.0695 to 1.0655 support. However, there is also an expectation of a rebound of this 200-day SMA or a pullback near this diagonal line that may drive the market higher again towards the 1.0980 to 1.10 round number. Now, looking at the technical oscillators, they are confirming this losing momentum on price. The RSI is falling beneath the 50 level, and the MACD is holding beneath its trigger line in the positive region. So moving forward, it's unlikely that the Bank of England will reduce interest rates before August, given the upcoming meeting on Thursday. In contrast, it's most probable that the Federal Reserve and the ECB will reduce rates in June. Indeed, as per the latest market assessment, the UK is anticipated to have the highest interest rates among the G7 by the conclusion of the year. This can be attributed to the comparatively persistent wage and inflationary pressures that surpass those of other economies. Now, looking at GBPUSD, we can see that the price is moving towards this medium-term uptrend line around the 1.2670 level, and also dropped beneath the short-term SMAs. And more losses may drive the market towards the 1.26 psychological level ahead of the 200-day SMA of 1.2588. If this area here acts as a turning point, then the market it moves higher again, testing the short-term SMAs, the 50-day at 1.2670 and the 20-day SMA at 1.2727 ahead of the 6-month peak of 1.2890. Now, the MACD and the RSI are also losing momentum, holding beneath its trigger line, and the RSI dropped beneath the 50 level, both confirming this bearish movement on price. Now, the Swiss National Bank is scheduled to meet on a Thursday. Similarly, no changes to borrowing rates are anticipated for this meeting. The SNB, the Central Bank of the Albanian nation, has the strongest argument for beginning rate decreases soon, with an inflation rate of only 1.2%. And also looking at the chart, the market is testing the 61.8% Fibonacci retracement level of this down leg at 0.89. Is acting as a very strong resistance, so any movements higher could send the market to the 0.8950, confirming this medium-term uptrend tendency, and also moving towards the 0.9050 to 1.9110. Alternatively, now and decrease beneath the 200-day SMA, and which also holds near the 20-day SMA, then it may test the 50% Fibo of 0.8790 ahead of the 50-day SMA of 0.8740. Now, if the market retreats further and have a closing session beneath this area here, then it may test the 38.2% Fib of 0.8680, changing the outlook to a more neutral one. Now, the RSI is moving slightly higher, and any movements above the 70 level, then it may suggest an overbought market. Now, the MACD is crossing its trigger line to the upside, and is increasing its momentum. So that's all from me. Thank you for watching and have a great day.